Good afternoon, everybody. It's Chris Robinson, Robinson Ag Marketing. Well, we've been waiting for it. We got our turnaround Tuesday on a Thursday here. Tomorrow's Friday. It's going to be a really interesting way to finish the week. Dees corn. Can't talk enough about Dees corn. Hit a new low overnight at 431.5 and then settled at 443. So 13 cents off the bottom, up 8.25 cents. A key reversal day. What does that mean? Well, in the old days, again, remember, I've been doing this for 30 years. In the old days, when you had a big move like this, a lot of people would use it as a reason to get long or to get very, very bullish. Quite frankly, I've seen a lot of key reversals that didn't pan out. So is it a perfect indicator? Heck no. But, it is a good chart pattern to see, especially if you're long. If you're a farmer or producer, you're always bet long, right? So this brings us back to where we are. This is why I've been trying to get guys to roll down their puts, have the cheapest puts possible. From top to bottom, we went from 506 to 431, a 75-cent break. Can we get a halfway back move? I sure do hope so. This is why we rolled down all of the puts that we had. Some guys had 480, 475, 470 puts. We rolled them all down to 430 or 425. We had some 435s that I was looking at this morning, and now those are worthless, which is good. But they weren't expensive because we had rolled them down. You always want to lose money in a put if you're using it as a defensive hedge, if you're a long producer. So I'd much rather have a 5-cent put on go worthless and have a 15-cent rally in corn with the top side completely open. I'll gladly lose the 4 or 5 cent put because I want to participate, hopefully. And, we just rallied 15 cents today off the bottom, 13. Can we get another 20? I hope so. And boy, wouldn't it be painful to be short futures if we did get a recovery, right? So that's why you want to use a put. Most producers, the key is you've got to manage the value of it. So as we head into Tuesday, the Acres report, I'm not going to tell you, gee, don't worry about it. The lows are in. Trust me. Because guess what? If I'm wrong and we go through 430 again and finish the year at 440, I have not have been doing my job. Now, I can think that the lows are in. I can tell you that I would still want to protect against a big flush lower in corn. So I want to keep a very, very cheap put on. And also, too, if you made the cash sales, our average cash sales are 488 on the bushels that we sold in 2026. Why you wouldn't want to have a 10 or 12 cent 10 or 12 cent call on here for the next 40 to 70 days? Not because I'm promising you that 10 cents is going to turn into 50. No, that's insane. But it's the only way for you to participate in higher prices if you've sold those bushels and want to re-own them, right? And the nice thing is, if you buy the call and corn collapses, all right, you can't lose any more than what you paid for the call. If you're buying futures here right now, you've got to know that there's still risk that corn, falls out of bed. So keep your risk on paper. Dees corn up 8.25 cents, 443. Novi beans, a 30-cent trading range. We hit 11.30 last night. Literally, I had 11.30 puts on, 11.35 puts on for guys. And I was calling them this morning saying, let's see if we can try and move these. Well, they expire tomorrow. Some of them expire later, but that's just how quickly these markets can turn. So we had puts on that were worth maybe 5 or 6 cents this morning that are worthless. However, we are 30 cents off the low, which is, again, if you're a farmer producer, that's what you want. You want to lose the value of your put, right? And now that we're back to 11.60, is there enough gas in the tank to go back up to $12? I don't know. I sure hope so. It sure feels like China stepped in and bought some beans overnight. We'll have to find out for sure. But, for us to have a 30-cent range and a big outside day up like this, that's probably going to be trotted out sooner or later. So also, too, remember, the funds never did get short beans. People were very mad because they got short corn and got short wheat, but they never got short beans. So it's very easy for them to maybe pile on back on the long side there. Again, today's Thursday. We have Friday, Monday. Then we have the big enchilada, the Acres report on the 30th. Make sure you get your risk on paper. Again, I'm not going to sit here and promise you the lows are in. I would say if you've got risk, I would keep a very, very cheap put underneath that risk. But I would also not be in a situation where I have sold 2 calls to pay for a put or something bananas like that because, if we do get a recovery rally, if we do make a run for the border, if we do head north like a homesick angel, like my friend Scott Shalody likes to say, you don't want to be sitting there with a cap on your potential recovery. Chicago wheat up 5.25 cents, but 11 cents off the low. KC wheat up 3.25 cents, but 9 cents off the low. Pretty good recovery there again. So, I'm kind of excited because I was getting pretty sick and tired of new lows. So we'll see. Good setup for Friday, and as we head into the big report on the 30th. Okay, moving over to protein complex. Well, we've been in a range trade forever in August fat cattle. 246 held again today. We'll find out tomorrow if we can push through 250, but a good recovery there as well. August feeders, another $6 trading range today, right? And we did almost challenge the contract high. We hit 77.40, the highest price for August fat cattle that we've had since May 1st. It's amazing. May 1st, we traded 379. June 4th, right? The whole New World screw worm. That's when it hit the press. That was the stone cold low. So we've gone from 336 to 377, right? What a recovery. And also another example of why most producers want to be using puts here, because I'd much rather lose 4 or 5 cents in a cattle put and still have had my defensive put on in case, we had gone down to 290, something crazy like that again. But now, okay, you've lost 3 or 4 cents on a put, but you've gained everything from 340 to 373. You've gained that 35, 40 cents on paper, right? And you've never made one margin call. So that is what I want to leave you with today. And we're going to find out. We're going to have the hog and pig report today. Hogs have just been getting flummoxed and beaten over the head. July did make a new low today, 92.50, settled at 92.70. For those, if you work with me, I was beating the pots and pans, saying, let's roll down our puts where we can. I don't want to have 2 or 3 cent puts on heading into a big report like this when we're so oversold. I don't want to lift them because, heck, if we keep going lower, you're going to need the protection. But we did take money off the table as best as we could on this roll down. And again, if you are selling animals into a 7-month low or 14-month low in the case with July, absolutely positively, if you're selling a couple pot loads, if you're selling 3, re-own one, right? Go buy a call for $1. 2 or 3 months from now, that may be the best penny that you ever spent. Okay, guys, this is Chris Robinson, Robinson Ag Marketing. If you're not getting my letter, go to my site. You can sign up. You can do it month to month. You can do the yearly. If you become a client, you can work with me on a daily basis. I'll help you pick out your hedge. I do, for anybody that subscribes to my letter, I give you specific cash gel recommendations. I give you specific hedges recommendations. And they're all out there in black and white. So you can bench race me, as they like to say. You can Monday morning quarterback me. That's what I want you to do. I've been working with farmers and producers. I've been fortunate enough since 2010, working with farmers and producers. So if you're looking for help, so some guys don't need help. Some guys don't want help, right? Some people hate brokers. I get it. I was born at night, but I wasn't born last night. But if you're looking for help, give me a call. Have a great rest of the night.